Welcome everyone to the Kendall Report. I'm sorry to be late tonight. Pretty hectic, just trying to get ready to be out of town is never easy. So anyway, it was one of those days. Not to mention that it was one of those days in the market as well. And last night I discussed the probabilities of market trading down toward the 21 period moving average. I didn't think we'd print an RTX or above RTX and then reverse like we did. And I did see some comments before I came on here, is that it was the bad cop was the Fed minutes, but they told you exactly what I told you they were going to tell you, is inflation, and then the mention of a mild recession. And I'm going with mild recession equals no recession, not big recession. You could look at this either way. You could look at it that we're going to see a bigger recession or something like that. Listen, it's, if you watch some of the comments around the different presidents or on the Fed just talking over the last couple of days, it's like just gibberish. It's back and forth. They're saying things that could be construed as being positive. They're saying things that could be negative. And I think they're just jawboning this thing. And the realities is that it looks like things are just going to continue to grind forward. I didn't show you this the other night, and I'm just making a quick note to myself I think I discussed it. I ended up going into a little bit of educational mode last night. I appreciate everybody checking that out. But let's talk a little bit, excuse me, about something else as far as what's going on. Is we're really looking at this sideways trading range for a year. 1 year we've been in this range. I'll show you here in a little bit. But the big number, everybody got excited. The headline number on CPI came in at 0.1. Year over year was 5%. The core was at 0.4. That was actually a little hotter. And then the headline, or the year over year, was 5.6. So markets were acting really well this morning. I was kind of shocked. There was a little reaction after the open this morning. Then we got that big push up into the 70 handle. And then somebody pulled the rug out after the Fed minutes for sure. And definitely, whether folks were reacting to the recession comments or whatever, that would surprise me if I think everywhere you go, everybody's telling you there's going to be a recession. So I think really, in my opinion, is that what was happening was folks who were just hoping for that pivot. They didn't get the pivot. They wanted to hear one little line, one sentence that said that, maybe they're going to pause or maybe have to lower rates. No one heard that. In fact, they heard the opposite. Inflation. The economy is resilient, blah, blah, blah. And that's what you're going to continue to hear, because that is the truth. And I think the reaction was just the fact that we're going to see higher yields yet. And even my good friend, I will comment, my good friend Hugh Hendry made a comment on his Twitter. And, how is the Fed going to justify raising rates if inflation is coming down? I'm going to go through this just for a little bit tonight, because I don't, and what I think is going to happen here with the Fed and rates, and I've said this over the last several months, is they want out of the QE game. They don't want anything to do with necessarily setting rates like they have in the past, lowering and trying to micromanage. I truly believe that they want to get out of that game, and what they're going to do here is just let the yields go where they want to go, okay? They're going to let the markets determine this. If those of us that have been around for a long time understand that the Fed has always adjusted rates to market rates, not the other way around, until you get to, I would say, Helicopter Bend, 2008, the big recession, the Great Recession, and all of that. Prior to that, and maybe a little bit before that, but Greenspan was not, he was always adjusting to rates. They made a couple things that happened, but we saw some of the rate increases. They were playing catch up with the market, not leading the market. And everybody, I know folks that if you've only been around these markets for 20 years, that sounds like you've been around for a long time. You're going to not understand what's going on here. And I I think that's the case, is that folks are expecting the Fed to micromanage this thing. I think they're going to step out of the game. I think they're going to let things go where they're going to go. I think they're going to keep QT going. They're going to keep downsizing. Everything they've told us they're going to do, they're going to keep doing. And I've been arguing this for a while, and I get a fair amount of pushback from folks. But this is, for me, the reality is that yields are going to stay here for a while. I mean, I've got a very broad range of expectations for yields going out multiple years. And I don't see the Fed pivoting, trying to save the market. That game's over. And I'm going to proclaim it here. We'll find out over time whether I'm right or not. But I think that game is over. And the game that is going to go forward is let the market set the yields. I think we could see mortgage yields as high as 9% over the next couple of years. And I don't see inflation going away very quickly. I think the title of this video tonight, I put in, will PPI decline? And it's expected to be up 0.1, maybe even 0. And I don't even think it matters if it does. The expectation is plus 0.1, excuse me, and or flat. Year over year is 4.6. That's really where we're at here. And agree with me or not, I would just tell you that as we go forward, you're going to see these yields are not going to budge. They're going to stay in this range. And I think we were seeing something interesting earlier. Some of the things I was talking about last night, where the long end was starting to increase and the short end, it was starting to try to invert and get more of that U shape that we have right now to be a little bit better. Backed off. Excuse me. I'm sorry. It backed off as the end of the toward the end of the session. That last couple hours when the equity markets were selling off, there was some adjustment to the rates, but I still think those are, generally speaking, what we're going to see. Economy will function fine with 4 and 5, even 6% yields. I went through the old school thoughts on that in the past, but I would just, as we come into tomorrow, we've got PPI, like I said, coming out. I don't know if we're going to get another spike. I'll show you when we go through the hourly charts on the E-minis and all of these charts. We're just getting these volatility bubbles all over the place. So it's very uncertain, but in the end, we're just expanding on some of the range. And I've talked about this as well, and I'll go through this in the technicals, is that what's been happening is the volatility has been contracting really narrow. Now, all of a sudden, we're seeing it trying to expand back out with CPI and PPI. This week's going to be over. And, so I'm just going to tell you again, remember, no YouTube next week. There will be some Twitter spaces I'm going to do, and they will come on probably right around the U.S. Open, around that range. I'll put some tweets out to let you know when those are going to happen, and I'll put out some screenshots so at least you can see the screenshots that I'm talking about. I'll put them in the nest on these Twitter spaces when I do them next week. And I'll let you know exactly the times. I'll try to give you a heads up, but I'm expecting somewhere even slightly before, slightly after the U.S. Open. Just looking here at my notes, and it was kind of like I'm trying to figure out what mode we're in. Are we in good news is bad news, or is bad news good news? And it looks to me like if the PPI comes in a little softer, it might initially be good, but I think everybody's going to realize that means maybe that means they're going to continue to hold rates here, raise them. It's just very fickle right now, in my opinion, trying to figure out what this is going to do. And I'm not sure it's that important at the moment. We'll see how important it ends up. But it does look to me that, as I mentioned last night, I thought we were going to see maybe a potential move down to the 21. We actually closed under the 10-period moving average. I'll show you on the S&P So there's definitely some movement. Some things have changed slightly overnight. And so, I think I told you last night I thought we could get through the stream fairly quick. I think tonight we'll be able to do that. But those are, those are I'm going to stick with this story. I'm not going to change. I keep telling everybody the Fed's telling you what they're going to do. I think I go back 2 meetings ago, just a quick, just finish this off. 2 meetings ago with Paul, and he told us he snuck in a little comment. It was in a Q&A session, and he snuck in a comment, and man, it just slammed me, and I can't get it out of my head. And he basically said that they are putting an action in place that they believe that long term is going to benefit the economy the most. And I'm paraphrasing that statement, but what I heard was what I'm telling you tonight is the Fed's going to they're going to let rates float to wherever they want to go. They don't care if they want to go to 7 or 8, and they don't care if they want to go to 2, but the rates will be set by the markets, and not by the Fed intervening and lowering, raising. Everything that you've seen in the past, I think you're going to have to relearn, and I guess that's my message tonight. So we'll see over time whether that's the scenario or not. I just don't see them responding to any kind of weakness in the equity markets or anything, unless there was a complete collapse. You can see even, as I mentioned last night, a lot of the money that went into the banking system because of SBV and because of Signature and some of these other situations has already stabilized, and it's already starting to come back out. Let's get into the database. We should be able to get through this pretty quick tonight. All right, so we're pretty stable here. Not a lot going on. 304 buy signals, 272 sells. We're at 43.24% bullish. So nothing budged today, and it shouldn't have had. I mean, the S&P was down 0.44, NAS down 0.85, Russell down 0.72. So a little bit of a pullback late in the session, as we talked about. But the database, really, there wasn't enough movement to make any real difference. There wasn't any big moves, really. We're just kind of stuck in this. I mentioned last night that I was talking about we're probably going to be in this 4,050, 4,150 range. And the way that we printed up to 77 and nobody wanted to own this thing up there was very interesting. All right, so we'll go to the hourly futures. Kind of an interesting configuration. You can see the moving averages are all negative. And like I said, these areas where we see these volatility, you can see this volatility off of the CPI report. That printed the highs. Those of you who've been around in the live room, and I've talked to you folks about this, this is one of those reaction. If I broke this down and put a 1 minute or 5 minute, this was one of those where you sell the reaction, then it fades. And it faded really good here as we came into the close for sure. You can see right here around 11 o'clock, we got that big blow up here. So I think it's an interesting pattern it's setting up, but it looks like we should start to stabilize a little bit, probably hover right around this 41.14 level from that standpoint. We do have a pivot up here that was generated. That pivots at 41.48. So as I just mentioned, the ranges that I'm expecting is between 40.50. We'll break this down a little bit better here in a second. 40.50 to 41.50, and we're just going to be chopping around, folks. I don't see any big moves, but I'll set it up because I think we can go down to probably down to the 21. So let's go over to the daily here. You can see that the PPM's turned down. We also, like I said yesterday, another event that happened is we did get an outside reversal bar. And it's interesting because I was talking about what the narrow range was that we had on Tuesday, extremely narrow range. This is where this contraction was happening. And I told you when the contraction happens here, when these market grid contracts and gets very narrow like it did, it usually tells you there's a downside action. That's what I was telling you about last night. So we got that. We're heading down towards this 21 period moving average here. That number right now is 40.55. So this is where we get sandwiched between the 21 and the 10. The 10 is 41.26 right now. Maybe we print up a bit above there, but we're probably going to get locked into this range. And as we look just at the algos, what's interesting is this PPM 3 down at the bottom here is showing that we're going to accelerate. And what that means, let me draw in a couple of things here. Let me go off screen so we can see this. This is what the moving average algos are telling us are likely to happen here. And let's just take a look here. So you can see on the PPM 1, they're kind of declining. We're staying stable here. It looks like we're going to stay slightly positive on this 21 up here. And then on the 40, what we're going to see here, and I'll try to draw this in the best I can here, is this 40. You can see it's starting to round off, and I believe it'll start to turn up, and then everything will resume to the upside. But I think we get some kind of formation here. Basically, we get some kind of a new box formation here, which is a consolidation, and then possibly, if you see down here below, is this is where the projections, you can see the algo is starting to slope up, and that's why I'm expecting this 40 period moving average to start to turn up. If that happens, then we set up a secondary phase. This is what happened over here. Let me draw something in here just real quick. This is what happened during this pattern right here over on the left here, as we saw that 40 turn up. Now, this is a much more compacted type pattern. And like I said, depending on what happens in this pattern right here, let me just clean all this out here out of the way. But depending on what happens from the standpoint in this range right here, how this configuration sets up will tell us about the next phase, whether we're getting this little pattern we were talking about last night. My expectation is we probably get into here where we stay above this 40, and then ultimately we can move out. And this has a lot more to do with the weekly. So what I will tell you for tomorrow night will be the final stream for a week. I'll try to keep track of the timeline here, and on your comments, just remind me that I need to go through and actually do a longer term viewpoint on this market. So let's go real quick before we move on. Let's go. Let me go over here, and this is, I want you to see this pattern because we do have this buy signal came out at 4,008, still long. I think that as long as we stay above this 21 and we consolidate above here and that 40 turns up that I just showed you, we should be in pretty good shape there. If we look at the market grid, one of the things I was talking about yesterday, the downside market grid here is, let me just get the numbers here. We had RXT 4167 printed 77 on the downside. we had 13 low, and S3 was 41.1275. So right on the money. And they were all over the place yesterday. I saw somebody on Twitter comment they had a great trading day with the indicators. It was a very good trading day if you were playing some of these swings. And there were several of them. If you caught that last, the best one was at the end of the session, no doubt. But just looking here, as far as today goes, we're looking at right now lows 41.10. We've got S1 41.06, S2 40.95. We bounced out of here the other day, but if you look at the 40.65 is the moving average here. These numbers are a little bit different than the TradingView numbers. There's a different database how they're calculated, especially since we have had a rollover in this sequence during this time. So these numbers will mismatch a little bit the way that these nearest futures on TradeStation roll versus how they're set up on TradingView are slightly different. So if you notice some values, but you can go with the TradingView values as well because they're all consistent. They're being calculated the same way. So let's, but this will be your key on this pattern here and whether or not we're going to get this next leg up and this, I'm going to go back to TradingView because this is what I wanted to show you. And I'll go into more detail, but if we go back, I've shown this before, but we go all the way back, you can see, let me just draw this in so we make sure we're all looking at the same thing. But we draw this, we do the box formation. This is really the range that we've been in for, this goes back to May last year, but we're just literally working this range, and it's random. It's a big consolidation. There's nothing more than that. This is weekly, and so we've had little mini uptrends and downtrends. The only difference is where the Wavetech database was situated last year. It was in a very negative mode. Matter of fact, most of our portfolios from the standpoint of what was going on in the portfolio management side of our software was we had a lot of cash last year. We didn't have a lot of positions. And the reason why is the markets were down. Even though they were consolidating, what we saw is between May and the October lows was enough consolidation and enough of these patterns started to hold that we started to get traction on the database. So the difference between now and a year ago is that we have much more traction on the database, specifically on the intermediate database, because you're really looking right now at the it's at 60, around 61, 62% long. So 6 out of 10 symbols in the database are actually in trend mode. So this is a much different configuration, gives us a little better feel looking forward for the potential of maybe getting outside of this box. Like I said before, the numbers 42, 44 are out there. I don't expect to see any kind of big bull market and things running away by any means, but I do see higher prices as we go down the road. And once we get maybe into mid to late May, maybe we can determine exactly what kind of patterns. As I've been advertising here, my expectations are that into Q3, probably first or second month of Q3, I have some concerns about, depending on where the markets are at that time, concerns about maybe a reversal and maybe seeing a couple quarters negative after that. Because let's face it, we're going to be coming into the election cycle. We'll start to see a lot of stuff start to kick off. We come into November, we'll be into general election mentality at that time. So there's going to be a lot of noise. Who knows with this world we live in now, what is possible. So, but this is a general view of this. So let's go ahead and see if we can get through the rest of this stream pretty quickly here tonight. Okay, so we'll go to NASDAQ. This is interesting. I had not reviewed this prior. I talked about last night. This is weekly, so we'll stay here for a minute. So we're kind of going backwards a little bit. We'll do weekly and then daily. But we're looking at probably coming back to these moving averages here, 12,598. I think somebody made it. I saw a comment. I think it was on Twitter. So if that was you, that the markets can't stay above 12,000. I believe they will. I think this is the same kind of consideration the way that we're looking here. The weekly, however, is looking like at least the moving averages down here are going to be really solid around 12,003, 12,200. I think that'll be really solid if we get there. The interesting thing is I don't know if I mentioned this on Sunday night or not, but we do have some new fib targets, 14,005, 14,845, and 15,063. That's these green dots up here. So let's come back and take a look at the dailies here. And so we're trading right on this. On the 21, I mentioned the three short-term fibs, 12,009, 12,730, 12,624. We're at 12,963, so we're trading just about on that fib target 1. And we also have that upward sloping 21, but it looks like we're going to get a crossover. So there's a good chance that we're going to come back down into this lower level, down into this 12,000, we'll call it 750, 12,600 level. Once we get there, we'll be able to determine this is a short-term daily, so it looks like this 40-period moving average is going to be the really key level there as far as the numbers go, and that's 12,000. I'm going to round it off, say about 12,600. There should be really solid support. And maybe we get sandwiched here, depending on what happens. We get stuck between the 40 and the 21 and 10 period moving averages. So we get some kind of consolidation here, and we'll see what sets up, whether we're going to have the ability to move this market higher here. And it has a much different configuration. I'm just going to bounce back to the weekly here for a second. But, it has this sideways mode. We did trade up just right up to the top end of this. So we're still working the range here on the NASDAQ too. So in real terms, there really is, if you had to break this down and say, what's the intermediate trends, you could argue that they're just flat. They're not up or down. S&P, NASDAQ, same way. And I just don't see anything really changing in here from that standpoint, other than coming into these moving average values that I mentioned. All right, let's go with the Russell. And we're going to do the same thing here. We'll go weekly, daily. But you can see the weekly is suggesting that this is next week we're going to start to turn up on this and potentially challenge the 10-period moving average here. 1832 is that number. Last trade here is 1785. So we should start to challenge these numbers. We're just flat. Look at all these moving average values are almost identical. 1832, 42, and 32 is 10, 21, and 40 period moving averages. They're all the same. And whether we can get above that or not, we'll see. But the algos at least are suggesting that we're going to come up and cross the first derivative on both the PPM 1 and 2, and PPM 3 is probably the most interesting looking. It's actually upward slope, and the longest average is looking the best. And also this is weekly now that we're looking at. These are looking like even the 200-week wants to turn up here. So I'm still looking at, we're still in this basing period. we still have a green bar this week. We'll see what sets up. Let's go over to the dailies here. I talked about this last night where we have this Fibonacci range here. It's interesting because all the algos are turning up here on the Russell. And we'll see the PPM 3 down here in the bottom is forecasting in the next 2 days. We're going to take out the second derivative. We've already taken out the first and second derivative on PPM 2, and we're looking at some acceleration here. So the market's going to want to get back above this 10-period moving average, this angle. I know it doesn't feel like after today, after the reversal, that we're getting that. And just notice real quick here, I didn't discuss the 3-day trade that's potential there. So all of these markets got a outside reversal bar, and watch for if we get a lower close on tomorrow, well, then we're probably going to get a couple more days down. But everything that I'm showing you, we should have limited downside in these patterns just because of the angle of attacks on some of these weekly averages that are just lying just under the market. This one here on the daily still looks to me like we're going to resolve to the upside. Yesterday we just barely closed below the 10, but what we should see is an acceleration over the next couple sessions. We'll see if we get that, whether the markets rebound. We've got big news coming out in the morning. We'll see if everybody forgets the Fed minutes by 10 o'clock Eastern time tomorrow, which is a half hour after close. See if anyone even cares about the Fed minutes. Typically, they may have an effect like what we saw today, and then the influence goes away very quickly. All right, so the 10-year kind of dipped down with all the craziness that's going on, and then ended up right back to, this is daily, right back to the 10-period moving average, sitting here at 3.42. The close yesterday, 3.42, right on the money. It still looks to me that we're going to see more rising up towards this 350 level. Nothing's really changed from last night's analysis. We should continue to come into these averages and ultimately probably move toward 358, 364 over the next several days. Yeah, crude oil next. Went right to the 200. I told you yesterday we probably got one more move to the upside. We still have these PPM 1. While it looks like it's rolling over, it's up at a 1.3. This I showed you the probability chart the other day. I don't have it loaded up at the moment, but the probability chart is suggesting with a 1.3 that we have an extended pattern that's unfolding here. So we could continue to challenge this and move higher in the pattern. So here we are at 83 bucks. So the OPEC plus move on the decreasing the output is still having an effect after that gap higher. And if you look at all the PPMs, they're still accelerating. They're all in trend mode. You've got PPM 1 at 1.3, PPM 2 at 0.76, PPM 3 at 0.13. So all of this stuff is we're going to use the SMA 10 as a key level. That's at 80.02 now. So that number is just coming up. It's going to continue to press this market to get above the 200-day moving average. Let's take a quick look. We haven't looked at this for a little bit, but I want to take a quick look at the weekly. And this is interesting, as the weekly is showing that the 40-week moving average is about to break through its first and actually the second derivative. If that happens, folks, then we're going to rise above this pattern, and I would expect to see a move potentially up into some of these levels between 88 and 90 even. That's going to be real interesting. So I'll try to cover this a little more in detail, set you guys up for next week since I won't be available. Yeah, we'll stay with the weekly stuff here. And weekly gold is, we've got that inside week I was talking about. I still don't think we get above last week's high. That number was at 49, 2049. So far this week, we're 43, so we're pretty close. We do have this upward slope. We still have an acceleration on PPM 1, and that's at 0.81 right now. So this is once again weekly. We're going to go weekly, then daily. And these patterns are just very strong here. And just curious what this number was over here. 2078 was a high on March of 22. That was that last peak. So maybe that's still in a challenge. But the reality is this is still in an uptrend. I was expecting some kind of sideways pattern to unfold, but we still have this upward bias that's going on. We just continue to climb this 10-period moving average. Right now, the 2016 level we printed yesterday down to 1570, and we were at 2009 was the 10-period moving average. Today at 1650, and with that rate right now, it's going up at about $5 per day, so it's going to be 21. So we're going to be continuing to move up. We're printing 2032 here right now, so just expect to see it climb this moving average angle here. What is happening is, looks like we're about, I've been talking about this for days, we basically got this RTX sell signal. We did kind of trade back into the moving average. What's the high here? Yeah, 2049 high. If we don't get above that, maybe we come back in to the 21. The algos on a daily are suggesting we're going to lose more momentum over the next several days. So we do have these fib targets down here. I mentioned it last night, 1998, 1978, 1966. I've been talking about 65 handles as a pretty critical level, but it looks now that this 21 period moving average right now is at 1987. That's going to be, we'll call it 90 to 85 is going to be your support. All right, final market would be Bitcoin. We did get, just looking here daily, we did get that RTX. We should stay in this pattern. We're seeing the market grid turn down, and the algos are not working here. I don't know what happened to the, let me just see if I can find a better symbol. The one I was using doesn't seem to be around at the moment. I don't know what happened here. All these different exchanges, and yeah, I had one that was really, really good, and now I don't even remember the name of it. There's so many of these. Let me just, I just want to see if we can get these things to calculate, which is frustrating. Yeah, here we go. At least we'll get some calculations. So you can see this 10-period moving average, this is daily, is still climbing upward. So there's still an uptrend. We've got some fib targets here that are laying out here at 38.54, 31.5. So we're probably going to continue toward those ranges. The PPMs and the algos are suggesting we're going to stay. You can see the slope that's being projected on the SMAs right now, and that looks like at least that line will be our support here. And right now that 10-period moving average is 28,813, and we're going up right now about $300 per day. So just look at that upward slope. That should be your support, but it still looks like the trend's in place, and we probably could print up toward these fib targets 38.54, 31.5. I'm just rounding these numbers off. Okay, folks, that's going to do it. Sorry about the late start tonight. Appreciate everybody still showing up. Tomorrow will be the final, so for this week, and it won't be back until the following week. So, like I said, I'll be doing Twitter Spaces. Not sure it'll be every day, but I'm going to try to do that. It just depends on what's going on, and so I'll do my best to stay in touch, but you got to follow me on Twitter to get that. There's no way I'm going to be able to do any YouTube stuff. So just looking at some comments here. Yeah, you can hit the like button. I like that. Yeah, just looking at a couple comments here, folks. So just bear with me. Yeah, just having to look through there. Hey, Mike, thanks for the super chat. Appreciate that. Yeah, folks, tomorrow's going to be an interesting day again because we'll see. Like I said, I wouldn't be surprised if everybody forgets about the Fed minutes at about, maybe not even 9:30, 8:30 Eastern time when we get the PPI news to come out. We'll see how everything trades, but it does look like we've got, as I pointed out in this stream tonight, we do have some downside in these markets for at least a couple of days. And like I said, I do my best to set everything up. I told you guys, and I appreciate we had a nice round of sales coming in. So get the indicators. You're going to have all the stuff I'm doing there. It's going to be very helpful for you to get them one-time charge. KindleReport.com/indicators. That's you'll find out how to get them. You have to have TradingView, and we suggest a pro account. So those of you that already have them, I appreciate that, and I'm glad that that they're helping so many people. That was the goal originally. So okay, this will do it, folks. One more night, and then off we go. So I will talk to you tomorrow night. I will be on time tomorrow night, and I'll see you then. And we'll do some longer term, try to set up looking forward for a week the best we can. All right, folks, have a great evening. Have a good day trading tomorrow. Yeah, it's not a vacation. It's work, but thanks.